All right, so price came down, okay? We've hit this 4-hour order block. We've tapped into that quite nicely and we've started to push higher, right? Taking out these protective highs. Okay, so if we drop down to the hourly, you can see that we've got protective highs that are being liquidated, right? On this bearish move, okay? Tapped into the order block, taking out these highs. We've had liquidity generation through there, a sell down into that liquidity, a move above, had some distribution and a tap into that order block, right? Some more liquidity generation through there, liquidation of that level, and you could have also got entered in there on the same thesis as well, right? All right, so where do we expect price to move to? Obviously, we want to see these highs liquidated, right? Which you can see we've already done. So if we move out to the weekly, right, we can start to form a longer term bias, right? So as you can see, it's a very similar setup, liquidation of these lows, right? A tap into the sell up, a buy up, sorry, a tap into the order block and higher prices. We'd like to see these highs liquidated, okay? Obviously, we understand there's a lot of liquidity above these highs. We've also got liquidity above these highs, right? And we've got an untested order block on a 4-hour time frame through there as well. So now our 5-hour trade on a lower time frame can potentially be partialed off at this weekly high and at this order block through here for a considerably higher risk reward trade. So active trade management can really make a big difference to your trading results, right? So what I mean by active trade management is how you manage your trade once you've placed it, okay? So we're not talking about entries into trades in this video. We're talking about how you can let your winners run, cut your losses short, and really squeeze the most out of your trades. So on the pound yen, we've been breaking down, taking out lows, right? And as we started to sweep some liquidity through here, accumulate some positions and break to the top side, right? Creating higher highs, higher lows. We saw some liquidity generation down here, a sell through that liquidity, a break above, some distribution, and a tap down into the order block, right? Some liquidity generation and a tap down into the order block, right? Or you could have got in there as well, okay? On the same entry. So instead of placing this trade, right, so let's say that we're just going for a 50% of that order block, right, and we're targeting the highs, okay, so we're targeting the liquidity above this high or a tap into the order block, right, whatever we're targeting there, liquidity above the highs, okay, as we've broken above these highs. So we've got a 5-to-1, and if you wanted to drop down to a lower time frame, okay, this is the hourly time frame, you could refine this entry even further, right? So this is our hourly point of interest. If we wanted to drop down, we could refine that further, but that isn't the point of the video, okay? So active trade management, right? Once we're in this trade, okay, we've got our primary target set. We got our stop loss set, of course, right? So we always want to put our stop loss in first, whatever we do, right? We want to make sure that we're protected, right? Our account capital is protected first before we think about targets, right? Entries, stops, targets, okay? Entries, stops, targets, always in that order, right? So the idea of active trade management is to let your winners run, okay? So like I said, there's no point cutting a trade here if the trade just wants to run, right? Because obviously we'll be jeopardizing potential gains, potential returns. So what can we do about this? So when you're in the trade, okay, when you've placed your trade, you've placed your orders, right? Let's just rewind this. Okay, so we've set our limit order, okay, we've set our stop loss and our take profit, okay. So let's say that we are trading one lot, right? So keep it simple, one lot. Of course, you have to calculate your lot size depending on your risk tolerance, right? How much risk your system can take, and of course the size of your trade, right, from your entry to your stop loss, okay. So if that doesn't make sense, and obviously this video isn't about calculating risk, check out the video on the screen where I talk or go through how to calculate risk in forex, right? So anyway, right, we've set our orders, okay, so we've got an order set for one lot down here, we've got our stop loss and our take profit. Now as price action falls down and we get tagged into the trade, right, obviously we know, because we've seen, that this trade comes up and takes our target. So we've entered our trade at one lot. okay, and our take profit has been hit. But obviously we don't want to take our full position off if this trade doesn't want to end here. So we can actually just take 0.5 lots off at our primary target, okay, where we initially want to look for our first sign of danger, right? Or where we think price is likely to want to target. So our original position size on this trade was 1 lot, okay? So now we've closed off half our position at 1 lot, so we've got 5R at 0.5 lots, okay? That's secured, right? Locked in, okay? So now to make sure that we don't give any more of this profits back, right, okay, we can roll our stop to break even. Okay, so now if price was to come down, okay, start taking out these lows and take us out, that we would have locked in 5R, right, and our other 0.5 lots will be taken out for break even. So this is now a risk-free trade, right? So we can't actually lose any more money on this trade. All right, so how do we maximize this move's potential? So there is a few ways in which we can do it. Obviously, we know that when markets are trending, okay, we get higher highs and higher lows, right? So a series of higher highs, okay, and higher lows, right? So with that knowledge, we can move our stop loss beyond these outside returns, okay, following price up. However, we also know that a lot of the time we get a move like this, we'll get a sell through the liquidity and then a push higher, okay? Very rarely does a market just trend like this, right? What we'll actually see is moves like that, a push higher, okay? Might get a big move like that, some price action that looks a lot like this, another push higher, right? We rarely get price action that trends like this. Obviously you do get it, but you know, you need to be careful of these fake outs, right? So as price pulls back, we don't want to roll our stop until we get a break above these highs, and then we can roll our stop to the most recent outside return, right? Pull back, an extension above the highs, roll our stop beyond the most recent outside return. Or wait for manipulation, right? So wait for the breaks of structure, okay? So a pull down, some manipulation, a push higher, right? Wait for price to come down, tap into the order block, and then push higher, okay? In theory now, this shouldn't get violated. A pull down, wait for the manipulation, and a push higher, right? So another thing that you can test is a moving average. So as price moves up, right, you roll your stop with the moving average, okay? Now there's pros and cons to that. It just gives you a nice line to follow, okay? A nice guidance to follow, and depending on the period you set it, you can have it follow it aggressively or give it more room. Okay, so this is a 50 and that's a 20. Obviously the 20 is going to be closer and it's going to be more aggressive, and you probably would have got stopped out here. Okay, but like I say, there's going to be pros and cons to each, as with anything in trading. Okay, there's so many ways to execute your plan, right? You can choose whatever you want. The most important thing is you pick something, you test it, and then you stay consistent with what you're doing. So now, instead of just cutting our trade at a 5R, right, we've actually now got a 13, we've actually got a 14R trade now, right? So we've got 5R locked in, okay, at 0.5 lots. And we've also got 0.5 lots running at 14R, okay? So as this pushes down, doesn't quite stop us out. Obviously, you don't want to put your stop, ideally, I mean, you can test and trade it however you want, right on this line. Because obviously we understand that sometimes price is going to want to come down, take the liquidity from these lows before traveling higher. Okay, so ideally we want to give our stop a little bit of breathing room. Okay, you can do that either by eye, okay, just based on, you know, just based on sort of discretion and the price action. You can use an ATR based stop, okay, so an average true range. So it basically just measures the volatility. An average true range basically measures the volatility or the range of a previous amount of candles. Okay, so say like you've got a 7 range ATR, it will take the volatility of the last 7 candles and give you a reading. Okay, and you can trail that reading beyond price action. Okay, so just to show you that, right, let's bring on the ATR, average true range, okay, and as you can see, this is a 14 period, right, so it's calculating the range of the last 14 candles and then giving us a pip value, right? So beyond this outside return, we've got 24 pips, okay, so 74, let's just say 50, 46, something like that, right? So it'd be about where we've got it anyway, okay? So we see liquidity generation, a sell through that liquidity, a tap down into the order block, and then potentially higher prices. And that's where we are now, okay? So as we start to break up, we can roll our stops beyond the outside returns, right? Obviously, we don't want to move it there yet because we want this to break down and move higher, okay? What might happen here is you might see a push higher, a sell down into the liquidity, and then higher prices. So we don't want to move it too close, too early, and be part of that liquidation, okay? So now, obviously, as you can see, this trade is running at a 15R, right? So instead of just capping our original position at a 5R, we've got 5R locked in at 0.5 lots, and we've got 15R locked in at 0.5 lots. Okay, and this is still running, right? But we know we've got a guaranteed 20R on the trade. Alright, so another way that you can manage your trades is like this, okay? So instead of rolling a stop loss, you can just take partials or partial profits at different price points, okay? So let's say that this is our first area of liquidity, right? And we want to target that, and then we want to move out to a daily time frame or, you know, a higher time frame and identify some higher levels on a daily time frame or even a weekly, okay? So let's say on the weekly time frame, we've seen some liquidity generation, okay? A sell down through that liquidity and a tap into an order block, right? And we want to target the liquidity that's above this level. Now, obviously, intraday, we understand that there is, you know, there's going to be liquidity zones, right? And order blocks on the way, which potentially could get mitigated, send price to the downside, right, before continuing higher. Or, of course, we could just, you know, break down to the downside, right, and continue a downtrend, okay? Filling in imbalances, right, maybe target an order block down here, okay, and see some higher prices. So we want to target, we enter the trade on the hourly time frame, right, and we want to target these weekly highs, okay, because we have identified these on the weekly time frame. We've got an idea, or we've got a higher time frame directional bias into this liquidity, right? Okay, so we've identified that level of liquidity, and if we want to add another potential target, right, scroll to the left, and then you can see we've got liquidity generation, right, a sell through the liquidity and a potential order block that hasn't been mitigated from, right? So we want to target that as well. Now that we've got some higher time frame targets, okay, we can potentially take, let's say that we choose to take 50% of our position, okay, so we've got one lot size position again, and we set a 0.5 lot target there, right, because that's obviously the highest probability trade, okay, so we want to just claw some profit back, okay, we want to get most of our position out at the first sign of danger. Of course, you can manage this however you want, right, you can put 0.33% here, right, 0.33% there, and 0.33% up there, right? So we'd have, again, one lot, okay, one lot target, one lot position size. We're going to take 0.5 lots off there at a 5R. We're going to take 0.25 lots off of here. And that is at a 21R. And we're going to take the other 2.5 lots, or 0.25 lots, off at that higher time frame order block, right? And that is at an ATR, okay? An ATR, not an ATR. 0.25 lots off at 86R. Okay, so then again, by identifying higher time frame levels of interest, right, you're potentially letting your trades run for a lot more, right? Right, so there is a lot of pros, there's a lot of cons to it, and obviously you just need to test this stuff and make sure that it's suitable for you. Because the other thing you've got to bear in mind with active trade management is you have to actively manage this trade. Okay, so that might sound obvious, right? But if you can't dedicate the time to actually, moving your stops, okay, behind outside returns, then partial profits may be better for you, right? So actually identifying levels, right, identifying these key levels and setting them when you set your entries, your stops and your targets, right? So that you don't have to, like I say, actively be managing, looking at the charts, managing this trade, okay? It's all going to depend on, your lifestyle, right? Obviously, I've said it before, you want to build trading around your lifestyle, not try and squeeze trading into your lifestyle, right? That is where you're going to find the most consistency and you're going to have the best results that way, okay? If you're unsure of anything, you got any questions surrounding partials, right, or active trade management, then reach out. I'm sure I can help you with whatever you're struggling with. I hope you got value from the video. If you did, be sure to hit the like button, subscribe to the channel, and wherever you are on your trading journey, I hope you have a good week, and I'll see you on the next one.